an exciting and scary day today, all right? There's a lot going on in not just the stock market, but the overall economy. There's a lot of inflationary pressures that we need to talk about. A lot of things have been getting more expensive. You guys have surely noticed it, especially as of late, gas prices. We're going to talk about oil, what's going on with oil, as well as what's going on with the whole inflation situation overall. We just got the PPI report out today. There's a bunch of exciting stuff to talk about, and we'll even touch a little bit on Russia and Ukraine and China as well. So there's a whole lot going on in the world, and stocks are actually reacting somewhat favorably to what we have going on. So in the after hours, we weren't down that much. In the pre-market, we saw a little bit of a dip, but have rebounded. It's looking like we'll likely open up higher today. So all things considered, not bad. And good morning, Quality, Karen, Kitchener, Leslie. Good morning, guys. So welcome. We've got some exciting stuff. So obviously, the first thing on everybody's minds, if you keep up with economic events and whatnot, is the PPI report. So wholesale inflation climbed 0.8% in February, lower than expectations, actually. So we'll take a look at the chart of what we've seen PPI-wise lately. And good morning, Quaid. And you can see PPI up 0.8% this month. It was expected to be up 0.9%. So actually lower than what people were thinking. Now, the PPI is manufacturing goods, so goods sold directly from manufacturing, so wholesalers. And apparently it looks like stuff like used goods, used cars, and oil and energy and whatnot might have been dragging the CPI up a little bit more and are not reflected in the PPI. So all things considered, the PPI a little bit lower than expected, and that has led to stocks being a little bit greener. In fact, you can see when this report came out at 8:30, we got a little bit of a bump. And we were already on the up and up because oil prices are actually going way down, all right? Oil has fallen pretty dramatically over the past couple of days. Oil prices have slid even further, though, below $100 per barrel. So that was a key level that a lot of people did not like seeing oil prices elevated at. But stock futures are green as oil prices are continuing to drop, boosting hopes that energy prices won't drag the U.S. economy into a recession. So we're going to take a look at the chart of oil real quick and just see what's going on. You can see we had this massive burst when the war in Ukraine first started, when all of these sanctions first started getting placed on Russia, and especially when Russia started getting oil sanctions, right? When the U.S. decided to stop taking Russian oil, we saw a big boost to oil prices, but that has all, for the most part, faded away, right? We're back down to $96 per barrel, which is where we were back towards the end of February, pretty darn close to it at least. So oil prices are on the decline. They're declining pretty dramatically, down 6% on the day. It's a pretty steep drop for oil. And it's looking like oil prices might be done being on this big rise. Now, obviously, things could take a turn. They could come back up. But once again, if you look at the all-time chart, we talked about this in a video yesterday, it's typically very rare for oil prices to stay above $100 per barrel for any significant period of time, right? So it was going to be very tough for that to happen, even with the sanctions going on in Russia. And you can see the few times that it has happened. One was in 2008, and it's always pretty darn quick to come back down. It typically doesn't last very long. This time was actually shorter than most. As long as it doesn't go back up above 100, then this was a pretty darn short burst above 100. So all things considered, oil isn't the big inflationary pressure that we're worried about. And good morning, Rich and Tanya. So oil is not the big inflationary pressure we're worried about, but inflation is certainly affecting a lot of different areas in the economy. It's probably the biggest worry that I have regarding the current economic situation we're in, right? Inflation could be pretty nasty. If it's not too bad, then we could certainly have some good growth. And even if we do see big inflation, I would still expect that stock prices would likely appreciate, right? Because inflation isn't necessarily stock prices moving down. It's money becoming worth less, and worth less in terms of all kinds of stuff, potentially stock prices included. In fact, some of the best performing stock markets have actually been during huge inflationary periods because people have actually wanted to get rid of the cash and they're willing to trade it for anything, stocks included. Now, I'm talking about countries like Venezuela and whatnot, not in U.S. markets, but we haven't seen massive inflation, hyperinflation like they've seen in other countries. So we'll see what happens. It's typically not ideal for real returns. For real rates or for real return rates, right? In the stock market, if inflation is massive, then typically the real returns that you see aren't all that large. They're larger during times when inflation is low, but the nominal rates are pretty darn high, right? When you end up accounting for if you just bought a stock and saw the percent increase, it would be pretty high during periods of high inflation. So all in all, I'm still bullish on stocks, but we are going to talk about some of the inflationary things that we're seeing in the markets. This one coming from Elon Musk, actually, right? Elon Musk even has to admit that there's a lot of inflation, and it's led to Tesla raising their prices for their cars twice. So Tesla hikes car prices in the US and China after CEO Elon Musk warns of inflation pressures. So the company, Tesla, raised the prices of all of its models in the US, and in China, they raised prices on the Model 3 and Model Y. And this is the second increase within the last week that we ended up seeing on Tesla's cars. So Teslas are getting quite expensive. I bet you all wish you had bought Teslas back when they were a little bit cheaper. Elon Musk was right. They are going to be appreciating assets. He said that, years ago, I think he said that. And he was sure right. A Tesla today costs a whole lot more than it did back then. So, you were lucky to buy the Teslas when they were first out. Everything's gotten more expensive. Just the base price has gotten more expensive. It's gotten more expensive to get the self-driving package. They used to give away free supercharging if you bought the car by a certain date. It's crazy stuff. Teslas, it was way better to buy them back in the past than it is now. And maybe it'll be way better to buy them now than it is going to be in the future. We've yet to see that. But Elon tweeted earlier this week that Tesla and SpaceX have seen significant recent inflation pressures in raw materials and logistics, and that is the only explanation that was given for why Tesla raised their prices, because Tesla did not officially give any comment to anyone on why we saw these price hikes, but you can actually see it in Elon's own tweets right here. He tweeted out, "What are your thoughts about probable inflation rates over the next few years?" And then he also tweeted out, Tesla and SpaceX are seeing significant recent inflation pressures in raw materials and logistics, so that makes sense. And then he continued to say, and we are not alone. And he linked this article, commodity prices soar to highest level since 2008 over Russia supply fears. So he linked that, and we will actually, I ended up pulling that up. It basically just talks about how expensive commodities are getting. Russia's a big supplier of wheat and oil and metals and ingredients and fertilizers and all kinds of stuff. So it just explained that commodities are seeing a big boom in prices, especially due to the Russia situation. But it's not as if they weren't already on the rise, right? Commodities were already on the rise before Russia ended up doing this invasion, this war. And we were already seeing prices move up pretty dramatically. In fact, I don't actually have the inflation chart pulled up right here, but I can pull it up. And you can see, the Russia situation really only started around here. So we were already seeing pretty significant inflation. We've only been up, as of the latest reading, up 0.4% year-over-year increase since Russia started this whole thing. And 0.4% isn't making up this whole big increase that you see over the 25-year chart, right? Over the past 25 years, we're experiencing the biggest inflation that we've seen yet. It's not looking like a great situation, right? It's not the highest we've ever been. We've been up as high as about 20% back during looks like the 50s. And then in the 80s, we saw pretty significant inflation as well. But we are still on the rise, right? And we're still expecting higher inflation in the coming months. At least that's what I'm expecting. And that's what some analysts are expecting as well. We're probably going to see higher inflation, not lower inflation. And that is worrying to not just people who are investing, right? People who are investing, I'm sure it's worrying to them, but people who are just living their lives, everybody is paying a whole lot more just to survive. And in fact, it's affecting households, right? U.S. households are seeing nearly $300 more per month of expenses than they were previously. So than they were a year ago, just about. So it's not looking like a good situation. We're looking at pretty expensive living. And it's not just the goods that these people need to spend money on. They're spending more on rents. They're spending more on everything. And it's not a pretty situation for anyone, especially, recently going to the gas pumps. Fortunately, though, oil is on the decline. We're likely to see a decrease at the gas pumps. And we're getting a question, what's up about CEI? We're going to talk about CEI. And in fact, since we're talking about oil, we'll touch on CEI right now. But oil. The big reason that CEI was pumping up, right? A lot of people I know are interested in CEI, Camber Energy. It's been on the decline the past couple of days, big time, as has the price of oil. You can see, we'll pull up the 1 month chart. Oil's been tanking. So it's no surprise that CEI is tanking as well. it's possible that we could see another burst up in the price of oil. At this point, CEI has gotten fairly low in value. I'm probably just going to hold my position here. I mean, there's not too much additional downside back to where it was. And, CEI has has been getting dunked on the past couple of months. I may as well it was a small position that I entered with CEI. I'm just going to hold it and see what happens with the price of oil. It's impossible to say what Russia is going to do exactly. They've actually taken some drastic actions just today against Europe. We're going to talk about what they're doing with some European planes in just a minute. But, it wouldn't surprise me to see Russia retaliate against Europe in some way and end up hurting them on the oil front. So it's possible that CEI could go through another little pump. So I'm going to hold my position here. I'm not too worried about potential downside. It's not, like I said, it's not a super large position. So it was just a little hedge against what might go on in the stock market and what might go on with oil prices. But since oil prices are falling, CEI is down. I would expect that if oil prices go back up, we'd probably see another rally in CEI stock. So back to what I was saying, inflation. It's looking pretty massive. It's looking like a pretty scary situation. And it's not just goods that are going up in price. It's just the cost of living in a house, right? Single-family rent prices are surging at a record rate. About a 12.6% increase year over year this January. What we saw for single-family rents. So that compares with an increase of 3.9% in the previous year. Crazy stuff. And Niner Zulu, HYMC paid off. Happy $2 Tuesday. I appreciate that, man. And HYMC, yeah, let's see. HYMC, that was the gold mining stock. HYMC did pay off. Look at that. Up big. Look at that. And what's interesting about that is it's not actually pumping with the price of gold. If you look at gold, gold is down today. So I'll have to look into what catalyst drove this thing up. It might just be a pump, but we'll look into HYMC in a little bit. We'll pull back up CEI for, well, actually HYMC is probably more interesting to have on the chart if it's currently pumping. So yeah, it's up big. Look at that. New highs on HYMC. Crazy stuff. I wonder what NAK is doing. I haven't actually checked the gold stocks this morning. So NAK is also up not nearly as much as HYMC. So HYMC up in a big way. If you guys caught the video on that, you should know it's a gold mining stock pumping on, well, we were just talking about commodity prices soaring, and gold isn't necessarily commodity that you use, but it's an asset, I suppose, and its price is up historically, right? You can see gold's price is up pretty significantly over the past year. It's gone up, especially as of late. We're not at the highs, but there's certainly potential for us to be moving up. We're actually down a little bit today. Gold is a play that I'm in, though. I'm in a couple of different gold plays, and we don't talk about them too often on the channel, just because a lot of people aren't too interested in gold. But during these inflationary times, it can pay off to have some hedges against inflation, historical hedges against inflation, at least. Gold is a more historical hedge against inflation. Bitcoin and cryptos, that's some new age stuff that people are talking about being a big hedge against inflation. It's potentially going to work. We'll talk a little bit more about cryptos, but currently, I think, here we go. Where did that story go? Rents increasing dramatically, all right? We're seeing inflation not just in goods, but in rents, just to live in a house, especially in cities in warmer areas. So the Sunbelt is seeing big increases. Single-family rents soared 38% in Miami year over year. In Orlando, Florida, and Phoenix, rents were up 19.9%, so basically 20%, and 19% respectively. Single-family rent growth extended its record-breaking growth streak to 10 consecutive months in January. So everything is getting crazy expensive. We're seeing massive increases in rents, in the cost of living just to buy food and goods. The PPI just came out today. For anyone who missed the first minute of the stream, it climbed 0.8% year over, or is that's not year over year. That's just the number that we got in February. Look at that, 0.8% in February. Lower than expectations, but pretty darn significant. We're getting scary inflation numbers, guys. And these are month over month numbers. I mean, 0.8% in a month. That is scary stuff. And it's below what people were expecting, actually. So, this is leading to a lot of people being unhappy, actually, with how much money they're making, and seeing job prices or seeing wages go up would only serve to increase the inflationary pressures that we're looking at. So we're going to look at what's going on at Google, because Google employees of all people, you got to think people working at Google make a ton of money, but Google employees are becoming unhappy with their pay. So crazy to think that people working at Google are becoming unhappy. But they do a survey every year, and we'll pull this up right here. Google's annual employee surveys, called the Google Geist, shows that a growing number of staffers don't view their pay packages as fair or competitive with what they could make in a similar role elsewhere. Crazy to think, because you tend to always hear about Google being a great company to work at. They have a great campus. I've been to the Google campus. They have gaming time. They have time off for gaming. It's basically like a lunch break, but you can game while you're working at Google. It sounds amazing. But only 46% of survey respondents said their total compensation is competitive compared to similar jobs at other companies. And this is likely because coders and anyone involved in tech at the moment is, if you're a worker, is experiencing a heyday, all right? It's incredibly expensive to hire coders. And people working at Google probably understand, hey, this is a great company to work at, but they might not be paying top dollar, at least compared to what some of the maybe shorter term projects out there are willing to pay just for a coder, just for an employee to get them on the payroll initially. A lot of companies are probably offering some pretty competitive packages, and people at Google, while they probably love the company, right, they probably love the work environment, some people are saying that their total compensation isn't too good. In fact, less than half of people think that their compensation is competitive, down 12% from a year earlier. So that just goes to show how much of an increase a lot of coders have experienced in their pay. And in addition, 56% say their pay is fair and equitable. That's down about 8% from the prior year. So a little bit over half, at least, say their pay is fair and equitable. But what's scary is, or what's kind of funny, is that 64%, so higher than the other two numbers, higher than the people who think their pay is competitive or that their pay is fair, higher percentage than that say their pay is reflected, their performance is reflected in their pay. So at least they're being honest, right? At least they're saying, I'm not making as much as I could, but I'm not working as hard as I could either. So at least they're being honest there, admitting that, they're not working quite as hard as they could. If they wanted to work a little harder, they could do it. So even people at Google are complaining about how much they're making. They want to be making more, and no wonder they want to be making more when we're looking at how rent prices have surged and how just the cost of existing has surged, right? You got to pay more for food. You probably got to pay more for healthcare, all kinds of stuff. Your phone bill probably costs more. Everything probably costs more than it did 2 years ago. And we're likely to see some further boosts to inflation now, especially so over the next month or two. Based on what's going on in Russia and Ukraine, it would not surprise me to see higher than normal inflation, higher than even what we're expecting inflation over the next month or two, because oil did get incredibly expensive. Russia's a big producer, like we said, of a lot of commodities, a lot of things like wheat, fertilizers, metals, palladium, and neon gas, I believe. So important things for semiconductors. Russia produces a decent amount of raw materials. They're a pretty big producer of stuff. And the fact that they're getting sanctioned and cut off, that's not going to lead to more efficiencies. It's going to lead to inefficiencies in the market. So I would expect to see higher than normal inflation. Now, that could mean a couple of things for the economy, for the stock market. What's important to realize is that tomorrow is a very important date. Tomorrow is when the Fed gives their big interest rate decision. A lot of people are anticipating what's going to happen at the Fed. A lot of people are very anxious about what's going to happen at the Fed. In fact, it was pointed out in a couple of stories that people and institutions are waiting to deploy capital until after the Fed's interest rate decision. They want to see what the Fed does. So we're probably going to see big movements in the stock market, in the SPY, in all kinds of stocks tomorrow when the Fed has not just an interest rate decision that they release. They also release their economic projections. They give a statement, and they hold a press conference. So a bunch of exciting stuff going on with the Fed tomorrow. In addition, we have crude oil inventories. Probably not going to be looking too good for those. We have the retail sales numbers coming out as well. So a ton of stuff is happening tomorrow. Tomorrow is going to be a very important day for the stock market. Hopefully, it will set us off in the right direction, right? That would be the hope, that we'd continue to see this green continue into tomorrow. We'll continue to see green then. Hopefully, we'll see really good stuff coming from the Fed. There's only so much they can do at this point, right? They have a choice to make. Inflation is obviously a problem. We're obviously seeing very high inflation, pretty darn high. If you look at the past 25 years, the highest we've seen in the past 25 years, and it's on the rise. In fact, I would anticipate it might accelerate due to what's going on in Russia and Ukraine. And the Fed obviously wants to stop that. They want to slow that down. They view that as being a threat to a long expansion in stock prices. And they're right. Inflation, massive inflation, would be a big threat to expansions in the overall economy and thus over the long term in stock prices as well. So it's not going to be pretty if we see really big inflation. So the Fed is going to try to combat that, but they don't want to combat it too hard, right? They don't want to be too hawkish, raise rates too much, because that would not be good for overall stock prices and a bunch of asset prices. Gold would probably get hurt from that if interest rates went up too much. And people overall would be hurt because there would be less businesses that are able to borrow money and less businesses that are then able to operate and maybe have to cut employees or not be able to expand as much. It's a lot easier for businesses to operate in low interest environments because they can get these loans and they can do what they need to do, and it doesn't cost them a ton to do it, right? They're able to operate if the activity they're engaging in is at all profitable. But if you slap a big interest rate on top of that, then all of a sudden a bunch of activities that might have been profitable if interest rates were low, all of a sudden are no longer profitable because you have to pay all the interest, and it tips the scales just that much further. So low interest rates are ideal for a growing economy. Now, they're not ideal for a safe economy necessarily, right? They're not going to make people have a bunch of savings. They might have a bunch of investments, but they're probably not going to have a ton of savings. So there is a yin and a yang to these things. Obviously, you want a decent amount of savings as well, but you also want people to have the money and the capital to do what they need economically and create whatever businesses they think will work. So it is a tricky balancing act, and the Fed is going to have quite a balancing act ahead of them tomorrow. I mean, it's going to be interesting to see what Powell says at the press conference. We'll probably listen to some of that at least. And then, the interest rate decision, Powell has said at the past press conference he's expecting a 0.25% rate hike. We have the estimate on investing.com at 0.5%, but we'll look at it tomorrow, see what actually happens. My guess is we're going to go with what Powell said, right? 0.25%. So we'll see. Now, I actually saw an interesting comment and a somewhat scary comment coming from, where did it go? From Great Man. And he says, and McDonald's had to increase all of their prices. I have not heard of this yet, and that is scary stuff. Let's see if we can find a story on this. Oh, boy. Okay, wait, that's from October. Let's see if we can see over the past week, maybe the past month. We'll see if there's any news stories on McDonald's raising their prices, because I know pretty much everyone here probably has eaten McDonald's before. Okay. Here we go. This is February 18th. Oh, boy. Inflation alert. McDonald's Big Mac is outpacing the cost of living. Price is up 40%. Wow. Well, that's over the last 10 years. Okay. So, let's see. I've noticed, at least in my area, we've seen over the past 2 years much bigger than even the CPI increase in McDonald's prices. The cheeseburger used to cost $1. It used to cost $1 to get the cheeseburger at McDonald's, and now it costs $1.60 or something crazy. I mean, 60% inflation on the cheeseburger. They're more expensive menu items like the Big Mac haven't gone up as much in price, but the McChicken used to be $1 and now it's $1.40. I think it's crazy stuff. I mean, huge cost increases in at least the cheap items that they've got at McDonald's. So really crazy to see. I mean, McDonald's is still cheap, but it's not nearly as cheap as it was 2 years ago. I noticed this right around when the pandemic hit. We saw big increases in the cost of McDonald's. I haven't seen any lately. I've actually not been going to McDonald's. I've been on a bit of a health kick. I haven't wanted to eat the unhealthy stuff they've got. Apparently there's trans fat in McDonald's. I don't know who knows that, but let me pull this up just for anyone who's curious. I always thought that trans fat, I always heard that was not allowed. But if you go to McDonald's own menu, you can pull up on McDonald's.com, their nutrition calculator, you go to just a random burger, right? The Big Mac, let's say. You look at this, and where's the trans fat? Total fat. Come on, where is it? It was here a little bit ago. Maybe they got rid of it over the past couple of months. Huh. Let me find a different one. Let me find a place that has the real nutrition information for all this. Okay, this could be good. Yeah, look at this. Okay, nutrition facts. This is a PDF from McDonald's.com, though. Let's just look at the double cheeseburger. The double cheeseburger, how much trans fat is there? 1.5 grams. Look at the trans fat column. Who would have thought that they were still serving trans fat in McDonald's? I always thought that was that got banned a couple years ago, but no, it's still there. And MCD is the ticker symbol. McDonald's stock. I haven't looked at McDonald's stock, but boy, oh boy, have they taken a huge tumble since January. They basically wiped out the year's gains since January. I mean, obviously their business has taken a hit. Inflation isn't going to be good for them, but also they ended up having to, well, not having to, but they decided to close down their Russian operations. So that obviously is going to hit their business, but down 16% since January, guys. This is what I'm talking about. A lot of stocks have been hurt massively over the past couple of months. A lot of stocks have gotten pretty cheap, in my opinion. I mean, McDonald's, I've not been a big investor in McDonald's in the past. It's typically done pretty well, but this is a big decline from what we normally see, right? This is the pandemic, and the decline before the pandemic, what we saw before that, the biggest decline we got was about 14% from the highs to the lows, and what we're seeing now, we're down about 18, 19%, maybe close to 20%. It's a big decline, and I believe officially, as of yesterday, the S&P just hit bear market territory. So the S&P now down below, or maybe it wasn't the S&P, something, the NASDAQ, I think, was down 20% or more. Let me look this up. Let's see. Over the past week, we'll see if this comes up. Here we go. 7 days ago, NASDAQ falls into bear market territory, so down 20% or more. Look at that. A lot of stocks on a big sale right now. And some people think they're going down cheaper, and they might go down a little bit cheaper. They might go down a lot cheaper. But overall, I think historically we'll probably look back at this in a couple of years and look at this as just another big dip on the overall rise of the stock market. I mean, we tend to see pretty good stuff from the stock market. Every now and then you see these big dips, and they do tend to just be buying opportunities, typically followed by fairly explosive growth. At least that's what we've seen recently. So maybe this time will be different. There's a first time for everything. It wouldn't be the first time that we saw a big bear market for years, I suppose, but the first time in a long time. So I'm overall not the most worried about that. It's a potential thing to be watching out for, especially regarding inflation. You probably want to watch out for inflation. That could be a big downside to what we see going on stock price wise over the next while, but it's not the biggest worry. Now, HYMC, we'll pull this up. I'm curious what's going to happen at the market open with HYMC. MULN did not do too bad yesterday, right? We moved up on MULN, but during the pre-market, we're actually down a little bit. Now, CEI, we'll try to pull up CEI here. CEI, once again, getting hurt with oil. So really, before CEI moves up, we're probably going to want to see some oil-related catalyst with CEI. And thank you, Mike Steele. Sorry for being late, $2 Tuesday. I appreciate that, man. And no, you're not too late. You missed you missed some exciting stuff, but we've still got, after the market opens, we'll watch that for a minute, but we've got an interesting story on Russia stealing airplanes. It's crazy to see. Meanwhile, China doesn't want anything to do with this whole Russia situation. They don't want to be affected negatively at all. And it makes sense. Who wants to be affected negatively? And Patrick Carosi says, puts on SPY might be a good move. What do you think? Well, we'll take a peek at that. So let's see. So puts on SPY. I tend to not be the biggest fan of just buying puts. I tend to not like it too much. We'll take a peek at the SPY puts real quick. Real quick. It depends. If you're buying them far out, then potentially that could be a way to go. Maybe if you're buying some leap puts, right? Then you could potentially make some money with that. The short-term puts, I'm generally not as big a fan of. And we're not even seeing bad stuff with SPY right now. It looks like we are starting to recover a little bit. But you can see that let's take a peek at the past 90 days or so. It's really tough with how quickly the options just lose time value. It's really tough to get a good put buy in there. You really have to be buying at an opportune time, and on any given day, maybe you could make some money, but you could also lose a bit too. Looking at the past, let's take a peek at this. The past year, there's a decent amount of red in there, but there's also a decent amount of green, and it really depends, where you bought this thing at. The value on the puts right now, if you're to buy a near-term put, let's say you were buying one for maybe a week out, maybe by the 23rd, you're still, for anything remotely close, right? To buy a $420 put, you're paying $8 of premium. So you've got to get the SPY down to 412 before you're at break even. It's a tough situation. It's a tough situation with buying, especially short-term puts. Maybe the longer-term ones, if you're really bearish on the market, then maybe you could buy some puts on it. They still have pretty darn expensive premiums, but at least they give you some time for the market to do what you think. But I will point out, NASDAQ's in bear territory already. It's already down 20%. The time to be buying puts was January, probably. We're down pretty dramatically. I'm not saying that we can't go down lower. We certainly could. But at this point, we've already experienced a lot of losses. I will pull up, I won't pull up the implied volatility right now, but the VIX, we'll pull up the VIX at least for a second. The VIX is pretty high at the moment, at least regarding where it's been the past year. This is basically tracking volatility. So the higher the VIX is, typically the higher the options pricing is, right? This is actually, I believe, based off of the pricing of options. So the more expensive options are, the higher the VIX gets. And they're looking pretty expensive right now. So I'm not a huge fan of buying the short-term options on SPY, but that's a way to do it if you think you've got, if you think that for some reason we're about to move down in a big way, if you think there's some kind of catalyst moving the market down, maybe the Fed will be moving it down tomorrow. That's possible. It's possible that tomorrow, when the Fed comes out and we get Powell talking and doing their interest rate decisions, if they give us a bit of a shock, maybe they raise rates by 0.5% instead of 0.25, as Powell said at the last meeting, then maybe you do get the market moving down in a big way. We'll see what happens, though. Right now, the S&P is actually up 1%. It's looking like the market overall is fairly green. A lot of stocks are coming back in a decent way. MULN will zoom in a little bit. HYMC taking a little bit of a dive during the very initial minutes of trading. Not looking great. But let's see. So from open, we're down about 11%. Still, though, up 72% on the day. Just a massive move on HYMC. Let's figure out what's going on with HYMC. So HYMC, what have we got? Wait. Hold on. What the heck? Look at this. This is a crazy story, guys, though. This is insane. You don't even believe this. HYMC, why it's moving up. HYMC, AMC said it's buying a 22% stake of a gold and silver mining company, marking an unorthodox move for the world's largest movie theater chain. Look at that. They're investing in Hycroft Mining Holding Corporation, a gold and silver investor. AMC said in a statement Tuesday, the party's equal stakes total $56 million, which will help Hycroft considerably lengthen its financial runway. So AMC is very fearful of inflation, it looks like. They're buying up a lot of HYMC. The investment from AMC is a much-needed boost to the Denver-based Hycroft Mining, which is trying to get the mine up and running on a sustainable commercial basis. Look at that. That's crazy. I had not heard of that until just now. I saw the price was up, but had not looked at the news. Look at that. Big boost to HYMC, up 76%. Crazy. Crazy, crazy, crazy. AMC. When you think that there's nothing new to say about AMC, they pull this. So that's really cool. Wow. So look at that. Now, HYMC currently has a $146 million market cap. Still pretty small. Still pretty small. Now, it really depends what goes on with HYMC in the future, depending on how well publicized this is. How many people who are a big fan of AMC end up buying into HYMC as well, you know? That makes this a much more appealing investment, honestly. That makes this a lot more appealing. The fact that that the apes might get in on this, that the apes might end up buying up this low market cap stock. Let's see if it's on Reddit yet. Let's see if we've got it on Reddit. So I'm not seeing it listed here. So look at that, HYMC. It's not really taken off on Reddit. It's only spot number 39. Wow, this could be something, guys. This is interesting. HYMC. It looks like it's on the decline right now, right? A lot of people, probably the older investors in this thing, the people who were holding this thing when it was 26 cents and whatnot, a lot of them are probably selling it right now. A lot of them may have been selling it in the past as well. But geez, if we fall a bit more, I might buy up some of this. This is tempting. This is very tempting. You know, I didn't end up getting into HYMC back during the past pump because I was already in another gold mining stock that was similar to this, that was pumping around a similar time, NAK. Too bad AMC didn't buy that one up, but they bought up HYMC. So we'll see what goes on with this. There's certainly additional room for it to grow. I mean, if the price of gold continues moving up, this could be a good one. But the fact that AMC is getting in on it, that is very exciting. That is very exciting for this company. That is probably one of the bigger things that's going to happen for them. Look at that. $150 million market cap just about. So AMC CEO Adam Aron, known for his brash pronouncements. Shares ran up last year. Okay. Our strategic investment, he says, being announced today is the result of our having identified a company in an unrelated industry that appears to be just like AMC of a year ago. It too has rock-solid assets, but for a variety of reasons it has been facing a severe and immediate liquidity issue. We are confident that our involvement can greatly help it to surmount its challenges to its benefit and to ours. Hycroft said in November it was halting initial mining operations due to rising costs for chemicals and other goods needed at the site, and it would change the way it processes the ore. Production in the third quarter, the most recent report was 14,800 ounces of gold and 91,000 ounces of silver. Wow. Sprott, who is investing alongside AMC, is well known in mining circles as the founder of Canadian money manager Sprott Inc. The firm is a longtime promoter of gold, offering investment products such as the $5.7 billion Sprott Physical Gold Trust. In addition to buying its 22% stake, AMC said it had received an additional 23.4 million warrants in Hycroft at $1.07 a share. Wow. So, crazy, crazy news. AMC buys a stake in this company. Yeah, this could be good. This could be good over the next couple of weeks. Next couple of weeks, this could be really good for HYMC. You know, or it could just be a little pump and then it dumps. You know, it's possible. But it really depends on how the news takes with everybody. So far, it doesn't seem like all the apes have gotten on board with this, but I think that, you know, it's a little underreported maybe. I hadn't even heard of this until I specifically looked into HYMC. But, you know, it looks like on Reddit, this thing still has some room to grow. Where is it even? It's way down here. HYMC is way down here. Yeah, it's down at spot number 30. It's getting some increased mentions today, but let's see what it's doing on StockTwits, because this is an interesting one. We might want to get in on this. We'll see. And Jeff Duval asks about Sundial. We will move on to Sundial in a moment. Okay, so on StockTwits, HYMC number 5, top trending, or most active. Not in the top trending right now, it looks like, but That's interesting. That is definitely very interesting. We'll see. We'll see what happens with it. Looks like right now it's on the decline, but we might find a good buying opportunity if it moves down much further. If it gets down below 2, that could be good. And before we move on to Sundial, we will look just very briefly at the Google data for HYMC. Oh yeah, this doesn't surprise me. Look at this. Compared to what it was doing last week, it just blew last week out of the water. So many people searching HYMC stock. Yeah, this is cool. So yeah, we'll sit on it for a little bit. I don't like making rash decisions. So anyways, guys, Sundial Growers. We are not seeing great moves in Sundial, unfortunately, right now. What we're waiting for, there are 2 things that are happening this month. And then there's a lot happening in April. So next month. So this month, we're waiting for the Alcon acquisition. That is going to happen at some point before the 30th, right? That's when they've said at least. So we're expecting them to acquire Alcana. That will probably be a volatile time for Sundial, hopefully. To the upside, hopefully we won't see too many people selling their Sundial shares. But also, after that, we're expecting the earnings call. It could be a good earnings call. We're going to see what happens with it. Now, if they do the Alcana acquisition beforehand, potentially, I suppose they would want to combine the earnings for the companies. And then they could actually maybe have some even better than what we might have expected financial results. And we might see a pretty decent earnings call come the 29th, I believe is when they're doing it, after hours on the 29th. So the 29th in about 14 days from now is going to be a pretty exciting day for Sundial as well. And, there's the potential, I will say, I say this when we're talking about Sundial lately, there's the potential that with Sundial, you might end up seeing, unfortunately, due to what this stream is all about, you might see higher inflation and bigger costs for Sundial. You might end up seeing their stuff cost a little bit more, and unfortunately, that could reflect in the earnings call. So they might be paying a little bit more for fertilizers and whatnot. That could reflect in the earnings call for what we're going to see in Sundial, but for the Alcana earnings, right? If we do end up getting those combined, if they merge before then, which, I mean, they only have a day after that to merge, if they don't do it by the 29th, at least based off what they've said, then we could see a good earnings call. So it's going to be up in the air what happens this month. Probably good stuff would be my hope, would be my expectation. But next month, we're getting Chuck Schumer introducing cannabis legalization to the Senate, according to him. You know, how politicians are, maybe they'll delay that. We've got a lot of politicians supporting legalization. Right now, there's a lot going on in the world overall. A lot of people are focused on Russia and Ukraine, not too many people talking about legalization. But I think once we see that, it could be good news for Sundial. We might end up seeing very good stuff for Sundial, most likely, as we really start to get legalization in the spotlight, in the headlight, probably before November would be my guess, when we're seeing a lot of politicians, particularly Democrats, trying to garner some support, because Republicans are already on board, at least Nancy Mace's, and she's got a bill in the House legalizing cannabis. So Democrats are really going to have to walk the walk as well as talk the talk. They've been talking it for a long time. I haven't seen them legalize cannabis yet, though. So we'll see what happens during the November primaries, right? Or during the November midterms, when people are trying to garner support. We'll see if those politicians end up using cannabis as a rallying call, right? We've seen the studies. We've looked at them a lot. A ton of people are supporting legalization. We're likely, in my opinion, to see big rallies in cannabis stocks, which have been on massive declines as of late, when we start to see legalization catalysts. So that's what I'm expecting with Sundial. Not too much going on with it until we start to see Alcana go through and the earnings call later this month. So in just about 2 weeks, we might be seeing good stuff with Sundial. Now, looks like HYMC is starting to get a little bit of a boost. Off $2, people decided this thing is cheap. They might buy into it. And maybe I should have bought it too. Maybe I should have placed an order for 2. I could have gotten that executed. Now it's at 210. We'll sit on it. We'll wait. We'll wait for HYMC. We won't just jump into it. It has already been up. It's up about 50% on the day. So we'll give it some space. We'll see what happens with the price action. We'll see. I'm a big fan of the gold stocks. I'm already in a bunch of gold stocks. I don't necessarily want to buy too many more gold stocks. And Vineet Hein says, what about the Fed meeting? That is happening tomorrow. There's a bunch of stuff happening tomorrow with the Fed. So the Fed is giving economic projections tomorrow. They're giving a statement. They're doing the interest rate decision. Very important interest rate decision. We're expecting 2.5% increases. Or 0.25% increases in the interest rates. Based on what Powell's saying, investing.com has it pegged at 0.5%. This is probably going to be a market mover based on what we see here, okay? If it's 0.25%, that could be very good. If it's 0.5%, that could be a little bit bearish for the markets. We'll see, though. And also a press conference from Jerome Powell. So that will be exciting to listen to. You know, he always has interesting stuff to say. I'm sure he's going to talk about the inflation we're likely to see due to the Russia-Ukraine situation. And Zach Taylor says U.S. producer price inflation surges to 10% in January, highest annual increase on record. Wow. Oh yeah, I guess the year over year. Yeah, we were looking at the month over month of 0.8% in a single month. Crazy. So producer prices going up quite a bit. It's getting pretty darn expensive. And, you know, gold stocks today aren't doing great. Let me pull up NAK. Well, let me add HYMC to this. So gold stocks, you know, gold is actually down. We'll pull up gold for a second. But for anyone who's just getting in, looking for HYMC news right here, HYMC, look at this. We're actually experiencing a big dip, so I'm glad I didn't buy in it too. But HYMC, for anyone new who's joining this and hasn't heard about this, I think this is the funniest news. It's kind of crazy. So gold is actually down. HYMC, it's a stock we talked about on the channel a bit ago when it was pumping due to the surge in gold. Lately, gold has not been surging. Gold has actually been falling, as has HYMC until today. In fact, today, during the trading day, it's actually falling a little bit, but crazy news coming from HYMC. You know, it's the kind of stuff you never would have expected to hear this, but you're hearing it here first, potentially. AMC buys a stake in HYMC, in this gold and silver mining company. So they said they're buying up 22% of this gold mining company, and it's $56 million, which will help them lengthen their financial runway. It'll help them, basically. They have a liquidity issue, according to AMC, right? They have a liquidity issue. They were shutting down some operations that now apparently they might not have to shut down, right? They might be able to go on mining and buying whatever chemicals they need because AMC is investing in them. And AMC is potentially doing this as a hedge against inflation as well, because gold and silver are probably going to be a decent hedge against inflation, which we're expecting to see a lot of over the next couple of months and maybe next couple of years. We'll see what goes on at the Fed and what they do about it, what they try to do about it. But gold and silver could be a good hedge against inflation. It looks like AMC is making that bet. So they're buying a 22% stake in HYMC, 23.4 million warrants as well at $1.07. So 22 million or 22% of the company equates to about 56 million is what they put in. In addition, they're getting a bunch of warrants, 23 million warrants at $1.07 per share. Now, this is interesting for a couple of reasons. One, it could be good for AMC, I suppose, right? If they're able to support their business through high inflation times because of these investments in gold and silver. But it could also be very good for HYMC. Now, if some people from the ape community decide to come over and buy into HYMC, obviously some have, right? It's up 40% even after falling quite a bit from the highs, going to the highs of where it was from right before this news was announced to the highs of where it got. It was up 150%. So this could provide a very interesting opportunity for people who are interested in an inflation hedge, but also a potential meme stock. I mean, it's getting close to being a meme stock at this point, right? It has gone through these pumps, not necessarily fundamentally based off the rise in gold, but more hype based off the rise in gold. Now that they've got this extra capital, they might be coming a bit stronger fundamentally. But we'll see. We'll see what happens with the stock price. You know, it's on the decline right now. It's looking like it's going to struggle with $2. You know, I would love for it to get a little bit cheaper so I could grab some up. Maybe $2 is, you know, we might look back on it as $2 being a cheap place because $146 million market cap, it's still pretty darn low. And the apes they have moved stocks up much higher than that, much higher than that. Now, obviously, we would need some of them taking interest in inflation, which could certainly be happening. This might be the anti-inflation play that a lot of apes decide to invest in. It could be. It could be. And, it could be. I don't like making these rash decisions and buying into stocks instantly. We'll wait until the stream ends at least. I'll think about it on my own. I'll meditate on it, and maybe we'll end up buying in. Well, we'll see, though. But Zach Taylor says, again, these inflation numbers are backwards looking and do not yet reflect the Ukraine-Russia conflict. That is right. So 10% inflation plus by summer, easy, he says. I warned about all this a month ago. Zach has been warning about this. So we should give him some credence, right? He has been warning about this high inflation. Now, Russia and Ukraine, once again, not being reflected in the current numbers. So, like I was saying in I think it was yesterday's video, I would expect to see pretty darn high inflation, right? Especially regarding what we've seen with oil prices. Now, they are on the decline right now. Oil is getting much cheaper. Day by day, it's getting a lot cheaper. It's down 6% today. But there is an increase in the cost of oil that a lot of companies have experienced that's either going to reflect itself either in price increases or worse, earnings calls. And Kitchener Leslie, talking about inflation, says they'll always make more gold, Rob. So, they'll probably be mining gold for a while, and gold is probably, as soon as they find that one asteroid filled with it, it's going to be worthless. But until then, it's an inflation hedge that a lot of people like. So, we'll see what goes on with it. There is something to be said. A lot of the cryptos, while yes, you can just make more cryptos. If you ever decided, we'll pull up cryptos while we're talking about them. We'll pull them up for just a brief second. If you ever decided that you wanted Bitcoin to be the main, not the main investment vehicle, but just the main store of wealth, store of value. If you ever decided that, if everyone just decided that, then technically there's only a certain amount of Bitcoin, and it would be a pretty good asset in terms of the fact that, you can't just find a huge reserve of Bitcoin somewhere, because there's only a certain amount that can ever be created, that can ever enter into circulation. And, gold, I will admit, it does have the weakness of they could find a ton of gold potentially, in space in an asteroid over the next couple of years. As we start getting those space companies going, asteroid mining could be a big deal. We might end up seeing, a whole lot of gold flood the market. But in the meantime, I'm not too worried about it. I'm not too worried about that. But nickel and copper, says Heckler Coke, getting very expensive. Yes, nickel and copper getting very expensive. Nickel and copper are. So, yeah. And Kitchen Leslie says, Rob has gold fever. Can't stop thinking about it. No, well, I like silver as well. I like a lot of things, not just gold. But yeah, this HYMC news is very interesting. I've been a long-time investor in these gold stocks, and this one is now looking very promising as a potential meme stock as well. And boy, do I like stocks that have multiple catalysts that could be taking them up. That way you're not just relying on one thing. I mean, there's multiple things that could go on with HYMC at this point, now that AMC is involved. So it's looking very tempting at the moment. I'll definitely be thinking about this. $2, $150 million market cap. If AMC really thinks they're going to be able to help them out with liquidity and whatnot, I mean, looking at where they were a year ago, this is still pretty darn cheap. I'm not sure if they've gone through stock splits or what, but this could be good for them. Okay, you know what? We'll get in a little bit. We'll put in a 500 share order at. Do we want to do it at $2? We'll do it at $1.99. Yeah, YOLO. Yeah, whatever. We'll do it. And if it ends up executing, it executes. It's getting pretty darn close. Watch this thing execute. Buying HYMC live. Look at that. So we're already down $12 on that. Okay. It did just blast right through. And whatever. If it moves down, it moves down. So be it. You know what? $1,000, whatever. We'll see what happens with it. It certainly could run up more than this. It's up 40% on the day already. But it's one that I'd rather be in at $2 and $150 million market cap, and see maybe it goes down to 1 and you lose 50%, then to look back on not having bought and it's at $10, that would be too annoying. So we'll start with that. Maybe we'll get some more of it. We'll see. Gold fever. Yeah, we've got gold fever now. We've got to get it. So look at that. Could have gotten it a little cheaper, but I figure it might play at $2 for a while. So we'll see. We'll see what goes on with HYMC over the next couple of days. As this news really breaks out. What's interesting is that it doesn't seem to have broken out that much on Reddit, which is where you might have thought. It's up to spot number 29, so more mentions are incoming. And, it could become a big pump. We'll definitely be making a video discussing this, breaking down a lot of what we've talked about on the stream after we end the stream, right? A lot of people who might be searching for HYMC are probably going to be very amused by what's caused it to rise. So we'll talk about it, and we'll see. We'll see. I'll look a little bit more into it off stream. We'll see what we got going on with them. Because according to AMC, they're looking like a good fundamental buy, even if with all this extra liquidity, with all this extra capital. And let's see, 1,400 production in the third quarter, 1,400 ounces of gold. Let's just calculate the price of that real quick. Let's see how much gold that would be at the current spot price, and then we'll do silver. So currently, I know gold is on a bit of a dip right now. Currently, gold is at $1,920, just about. So 1,483.1 times 1920. It's $28 million worth of gold produced this quarter, plus what they've made in silver. Obviously, there are manufacturing costs and whatnot, but 91,437 times, and what's silver spot? Probably 20-something. Where is silver? $24. $24.5. All right. Let's just do 24. So about 30 million bucks produced this quarter. Not bad. Not bad for a quarter's worth of production. I mean, their revenues must be, if production is always this steady, their revenues must be almost what their market cap is. So a good price-sales ratio, especially if they're moving all of it. And if gold is moving up, then that could certainly be good for them, especially if they can afford to re-engage in whatever operations they had to put on pause due to liquidity issues. So we'll see what's going on. We'll see what's going on with HYMC. It's looking like $2 might be the level that holds. It looks like we're certainly playing around there for a period of time. They're interesting. That's an interesting one. I'm glad that I bought some, and maybe I'll live to regret it. Maybe it'll move down, but I'd rather be in on it. And look at that. I'm up 5 cents. Now I'm up nothing. Oh well. So we'll see what happens over the rest of today, and potentially tomorrow. We'll see if we can get an updated market cap for them. Look at that. So look at that, $120 million market cap now. So they have fallen. So the $150 million was back when they were at $270. Now it's at $120 million. So look at that. They have fallen already. And we will look at the short interest, obviously. We've got to look at the short interest. If AMC is involved, we've got to look at the short interest. And that might be one of the last things that we do on the stream today. It's getting close to the end. So we'll look at short interest for a couple of different things. Oh, wow. No wonder AMC likes this company. Look at this. So short interest, about 20% increase today compared to what they were doing yesterday. We're at 22.56% of the free float being short, 6.03 million shares. So about 12 million bucks short, as estimated by Ortex. But so look at that. With their estimate is has a very wide confidence interval. They're saying there could be anywhere between 0 and 16 million shorts in that thing. So who knows? But Ortex is estimating it's around 6 million. So that's their estimate. But it could be in a very wide range. And, probably because this is a developing situation, shorts, they're guessing, are surging into this one. A lot of the AMC shorts are probably surging into this, but we'll see if they end up getting hurt. It is a low market cap, $120 million. That could easily 10x to get to $1.2 billion. It looks like the price has fallen a bit, though, down to 188. We might have to buy up some more of this. We'll see. Well, I'll mull it over, but that is the stream for today. HYMC, very interesting play. I'm glad we were able to get in on it. Maybe it'll get a little bit cheaper. Maybe it'll get a little bit more expensive. Who knows? But interesting stuff in the markets. Inflation is a big threat, so I'm happy to be in gold stocks at the moment, right? I'm happy to have a decent amount of gold holdings. We'll see. Gold hasn't been too great the past couple of days, but the past month it's been soaring. So that's really been saving the portfolio. Anyways, guys, that's what we've got for the stream today. So thank you for joining. Keep in mind, we do these streams, if you're new, every morning at 9. Feel free to subscribe to the channel, like the stream. It certainly helps out with the algorithm and whatnot. And what's a good price for HYMC, Drift and Juke TV? Can't say the price specifically. I bought close to 2. I bought 199, but I might average down. We'll see what goes on with it. I'll make a video on HYMC, and I'll try to make that quick. I'll release it probably within the hour. So keep an eye out for that for anyone who's interested in HYMC. If you're watching on Rumble or on YouTube, feel free, hit the subscribe button. Check out the Locals channel. It's the red join button on Rumble or the top link in description. You guys get access to the Locals channel for free. Post all kinds of stuff there every day. We'll certainly be talking about HYMC there. So for anyone who's interested, join that. And other than that, guys, we have a very important day tomorrow with the Fed. The Fed is doing a ton of stuff. So I'll see you guys at 9 sharp. And have a great rest of your day. Bye.